Well, hello everybody and welcome to the Middle Class Investor. This is Seth Martin. It is Saturday about 10 p.m. So I'm looking at this at night and we've got a 20-year chart of the S&P 500 up, and you can see we are at the very tip top. This was the 2009 low right here. This was the 2002 low. The end of the dot-com bubble, and the really big picture here is we've got some sort of expanding triangle, which is interesting because we have another expanding triangle here. So the super big picture is that probably come somewhere down below the 2009 low, maybe down here around 600. Now that's that is a long way away. So the first thing we are going to do is come down here first, which we should begin soon. We had the first down week in about 6 or 7 weeks, something like that. Let's see, 1, 2, 3, 4, 5, 6, 7. Yeah, so the first down week in 7 weeks, and it wasn't even that down. Now, if you recall, a couple weeks ago, because we haven't had recordings for the last couple weeks, we talked about this line here, this downtrending line right here, and I said it didn't even look like it would get back above this, but it's actually trying to get back above this top yellow line here. But you can see the internals over this whole period of time are marginally weaker. So, and we've got volatilities at a record low here. The markets are actually coming together in terms of the divergences are no longer there really, except maybe on the NASDAQ. So anyway, we're at an interesting juncture. This is almost, well, it's setting up for something kind of like a bearish harami, but we made a high above this high, and a bearish harami usually stays inside this range here. Let me zoom in a little bit. So it's a little bit different than a bearish harami. A bearish harami would be something more like, this, where this whole range is inside of this range. And of course, it's really only a bearish harami if you get a close below the inside candle. So it's slightly different than a bearish harami, but it's an interesting candle nonetheless. I think it's showing we had this big thrust up last week. We had a new high, a new intraday or new intra-week high, and then we pushed down, and then kind of rallied back up, but only rallied up about 2/3 of the way, which is typical of a 62% retracement. So we can go on here, for example, when you look at the hourly chart, and we can just focus on this move right here, and it does look like it could be, kind of a 1, 2, 3, 4, 5, 4, 3 here, 4, 5. But let's just use Mr. Fibonacci, and I always like to do this when I see something that's pretty close. I like to go ahead and measure it. So from high to low, we get this, and you can see we got right up. So we might actually rally a little bit more. We might see this come up into the 62% retracement area next week. In fact, we could get something that looks kind of like, when the week's over, it looks kind of like this, where we rallied up into there, hit the 62% retracement, and then turned around and went lower. And then, of course, the next thing you start looking for candles that, kind of start going like that. So I keep hitting that button a second time. I don't mean to do that. But anyway, that's if you break all this down to an hourly, we're pretty close in there to the 62% retracement. And this clearly looks, this looks like an A, B, and this is all C. In fact, one of the things I'm kind of seeing here is almost what's referred to as a ending diagonal. And ending diagonals are usually, I mean, they can be in the wave C position, but they're usually in the wave 5 position. But the interesting thing is here you can kind of see if this is A, B, and then C could be 1, 2, 3, 4, and then 5 would have to make a new high. So maybe just slight new high up here around 31. Not a new high, but a high higher than this high. In fact, let's just draw that on there. Even though we're on an hourly, let me go ahead and draw that on there. It's really, I mean, it's really not an ending. In fact, let me do this. Let me go to the futures chart, because sometimes the wave patterns are kind of incomplete in the index chart, and sometimes they look a little bit more complete in the futures charting. So, you know, and see this high here, it kind of happened in so it's a little bit arbitrary what I'm about to do here, but this high right here happened in the after hours. So if we use this high and connect it there, and then we use these two highs here, so this could be 1, 2, 3, 4, and then 5 would be up here. So so see, that's kind of an ending diagonal. So what you're looking for is you're looking for, let me see, why don't I just leave that there? We're looking for a move to be, we might get something like overnight on Sunday like this, and then something like that. And of course, once this breaks down through here, it usually does so with some gusto, and it might come all the way. It might come all the way down to the trend line, and then retest this, and then really fall through. I mean, that's how these things can kind of go. Just, I mean, if you haven't learned anything up until this point, what you probably do know is the market doesn't go straight up and doesn't go straight down. So, we'll probably have something up into here. I mean, this is just kind of what, like, if you're going to trade, you need to have some sort of stance. Okay, what is the market going to do over some period of time that you're going to trade it? And so this is just kind of a way for me to take a stance. So maybe what I'll do is I won't necessarily trade bullish, but I might get bearish right here, let's say, and then trade down to the trend line, which is right there, and then take the bearish positions off. Maybe not even trade counter trend, although that's quite a bit of that's a pretty decent move there. Maybe do trade counter trend. You get something like this back up to retest the underside of this trend line, and then I get bearish there again, let's say. Okay, so that's just a way of kind of looking at how you might take a position or a stance in the market. All right. Again, so what we're looking for, another way to think about this is the first move down. We've got this retracement back up to a lower high. So as it rolls over, we might get bearish. Now, where might we stop? Maybe. Well, it just depends. I mean, it could again stop here at the trend line and bounce a little bit, and then fall down through here, maybe into this area around 30.57, or maybe all the way down in here to 30.15. So just keep your eyes peeled and trade accordingly. Here again, we have another, kind of looks like another ending diagonal, although it looks more complete. Hard to say, but that's on the YM, which is the Dow. The NASDAQ, has a little bit different pattern. It looks like maybe it's into a 1, 2, 1, and then this is going to be maybe a 2, and then maybe 3 of a 3, kind of a thing. So All right, let's switch over to bonds. This is 30-year bonds. You can see we have this high back here. Wait, hold on. Let me get back on a larger chart. Oh, excuse me. So you can see here, we had this high in 2016. We had this run down. We've had this correction back. Now we've got the kind of this retracement, and it could be an ABC, and we're going to make another new high, maybe right into this area, or it could be a 1-2, 1-2 kind of a situation. The reason it's got me thinking it's probably a 1-2, 1-2 situation is the fast line is below the slow line on the MACD. Let's look at, sometimes I like to look at the 4-hour and see what that looks like. Yeah, so see the fast line is still below the slow line. So my guess is this is probably not an ABC, and that it's probably more like a 1-2, 1-2. We should expect the bond market to resume lower prices soon. You can look at oil. Oil is really, hopefully none of you are trading oil. It seems very frustrating to me, but I'm looking for oil to kind of grind its way back down into here to the mid 30s area before it bounces and continues to follow this pattern. All right, Euro US dollar. Euro US dollar is right here, and you can see kind of what we're looking. It's funny, I hadn't moved that in forever, and it just came right down to that box, which is kind of interesting because it's pretty arbitrary where I put that to. But we got a little pullback, probably in the wee morning hours when the euro starts trading. It'll probably pull down below this low, and that's probably going to be a great place to enter, and then we should have a wave 3 kind of move. If you want to know kind of what that move might look like, if we go to, again, Fibonacci, but this time we're going to go backwards this way. Sometimes I like to see, I like to kind of know where is it that I really need to start thinking about getting out, and for a wave 3 that's this degree of trend, I think you can stay in until you get into this area, and then probably it's time to maybe step aside, let some wave 4 happen, and then a wave 5 probably up into wave 5 would probably get up into this area here, something like that. So the problem is wave 4 could take a long time. So let's say you trade up here into wave 3. You want to go ahead and get out. At least I do, because this could go sideways. It could take months, and then you just got kind of dead money in there. So it's better to kind of take that money, put it back in your account, and look for other opportunities. Those other opportunities might be in the Canadian dollar, or it could be in the British pound US dollar, or it could be in stocks or whatever. It could be in the British pound JPY. These are some that I'm not really following that much, but opportunities pop up in here all the time, so you got to keep your eyes open. There's the Swiss franc JPY. So here's the US dollar Swiss franc. So there's a lot of different charts here you can keep your eye on. Again, the thing I want to mention about these currencies, when it's a pair like this is a pair, US dollar / Swiss franc. When it's a pair like this, you have to kind of look and see what the interest rate differential is, and if it's negative between the two countries, then you're going to have to pay a daily rate of interest to be in that trade. If it's positive, that means they're going to pay you to be in the trade, a daily rate of interest. So just like, for example, the euro US dollar right now is, well, if you want to be long the euro and you're trading the currency pair like this right here, even as you're in this trade, maybe it's going up like you want it to go up, but you're still going to pay a daily rate of interest because the interest rate differential between the U.S. dollar and the Eurozone is such that you have to pay a daily interest. Excuse me, to arbitrage the two currencies. Hopefully that makes sense. So another alternative is you might want to trade the future. Now you know it's not as leveraged, so you have to have more money in your account to trade this. For example, you can trade forex with $200 in your account, but to trade futures, you're going to need more like like if you want to trade one contract here, you might need, I don't know, $5,000 or $6,000 in your cash account. Let's say maybe 7 or 8. I mean, it just depends on your broker. But you won't have to pay that daily interest if you want to get long the euro. And like I said, what I'm looking, if we zoom in on this a little bit, let's just look at the daily. You can kind of see this. This looks like this could be, you know, some sort of where this is A, B. Excuse me, one up, and then A, B, C down. In which case C is an A is a 1, 2, 3, 4, 5. So I might look to enter the euro just below this low here and get long and trade up to, you know, that target, which is, well, it's not on this chart, but let's draw it on here so we have it on here too. Let me get rid of that. Zoom out. Whoops, can't zoom out. Yeah, I can. So if this is a 1 and this is a pullback to 2, then let's see where these numbers kind of pan out. So 1 here, pullback to 2. So in other words, on this one, I'm going to look to step aside in this right here off this pivot near this 2.6, kind of right in here maybe, and then I'm going to expect wave 4 to kind of start happening here, and then 5 up into this area. So, you know, just below the 377 area. And these are just, you know, these are somewhat arbitrary. I'm using Fibonacci to help me mark these places on the chart, but they're still arbitrary. There's no guarantee that this is going to go into here, and there's no guarantee that it's going to chop a little bit and then go up here. I mean, these are just based on my experience. Now, look, if you go to the 4-hour, you can see that the fast line is curled below the slow line. So, I mean, this could come down and make a new low right here. In other words, what we could be seeing here is you know, like a 1 and then an A, B, C, where C ends in this area. Whoops. So it would be a flat, and C would end in this area right here around 1.1. So, well, I mean, I basically said the same thing. It's just here I was looking at a weekly. So it's still a higher low. That'd be interesting, though, if this was 1 and then A, B, C, 2 with a flat. But yeah, I'm looking, if I can get in here at the right time and the right amount of risk, I'm looking to trade into this area. So feel free to do that. Don't do it. Do your own analysis. A guy that used to train us at Invest Tools used to say you can't trade what you can't see. So just remember that you need to be able to see it so that you can find trades on your own, and also know how to manage trades, which is probably even harder than finding trades. So, all right, I think that's it for this week, everybody. Thank you for coming in. I can't remember if we looked at gold and silver. Let's just look at gold. We got this long-term, potentially ABC thing happening here, and we should be it's possible that B is complete and we're starting to move down. Or, it could make it one more thrust higher. The reason it might go one thrust higher is that C is very lagging. So we could very well see C kind of up into this area, and then gold would follow along. All right, everybody, that is it for this week. Thanks for coming to the Middle Class Investor. If you have any questions or comments, put them in the comments section, and we'll talk about them here. And next week is Thanksgiving, so I won't be putting out a video. Well, next Thursday is Thanksgiving. Of course, that weekend, mostly spent recovering from food coma. So probably won't put out a video next week, but keep your eyes peeled. This could be at a very important juncture here at the top of the equity markets. And also look for the bond market to roll over and continue going lower. All right, everybody, take care, and thanks for coming in. We'll see you not next week, but the week after. Thanks a lot. Bye-bye.